Welcome back. Well, as we were mentioning, the markets are pretty much flattened out. The Nifty now has moved into the red. However, what's encouraging is the kind of performance you're seeing from the broader markets. You have way more stocks that are advancing in comparison to the number of stocks that are declining. And the mid-cap index, it's up yet again. It's up closer to around 0.4%. Let's pull up the small-cap index as well. I think that as well was holding in the green. Well, let's get to our next corporate then. We have Monte Carlo. They reported their best ever quarterly sales numbers for the month of March with a 36% growth compared to a year ago. The company's annual sales as well for the fiscal grew by close to 22% in comparison to the previous year and a 51% growth in comparison to FY20, which was pre-COVID period. Mr. Sandeep Jain, the Executive Director at Monte Carlo, joins us on the show. Hi, Sandeep. Good morning. Thanks so much for joining in. Well, last year you told us you'll do something between 20 to 25% growth on the top line, and you managed that. For the coming year, that's for FY24, given that you've held a couple of trade shows as well, what kind of a growth number are you estimating for FY24? And now input cost, you have cotton, yarn costs that have cooled off a little bit. That'll be good for your business, right? So I think earlier you were talking about 20 to 22% margins. What's it likely to be?
Thank you, Nigel. So whenever we give our guidance, we have been very thoughtful and we want that we should be near to the accuracy. So normally we give our guidance once we have our trade shows are over, and that is expected to be over by 15th of May. So normally we give our annual guidance in the yearly results, which is around end of May. So at that time, we normally know about our forward-going business, about the bookings, about the home textile business. So that is the right time for us for estimating our current sales and the future sales also.
All right, Sandeep, but at least, we'll get the official guidance at that point of time. But now since the trade shows have been done and you have this, the home vertical business, that home textiles business that you all have been focusing on, could you tell us, as of now, the home textiles business, I think you were guiding for around 160 crores. What kind of a growth you're looking at, given that you've put in some capex out there? And can you do maybe high teens to 20% odd growth for the business on the whole? As of now, things can change.
See, home textile, we have a good news that the land has been procured in J&K, which is Kathua. So I think we'll start the groundwork now. So we hope that in the next year, Q1, we should have our plant operational. But in this year, we are again looking at home furnishing store, a reasonable growth. But again, as we have a trade show in 15th of May for home textiles, so at that time we can give the future guidance for home textile also. But I'm very confident that home textile is one segment which is basically growing faster than the rest of the business. And I hope that it should continue its growth.
Okay, so when you say continue its growth on an average, what are you looking at in the home textile business over the next couple of years?
I can't give you any forward statement as of now,
Sure.
as we have a trade show which is on 7th of May and 15th of May, so I'll let you know at that point.
All right. You've also hiked prices quite a bit. I understand that there was a 40 to 50% price hike that you took last year. Now with input costs cooling down, would you be looking to roll back prices in the next couple of months?
The last year average price hike was around 10%. So this year the raw material price have gone down. So that will definitely benefit the brand because normally the MRP doesn't go down. So margins should improve going forward.
By how much? I mean, do you want to give us at least a margin band that you could be looking forward to, given that input costs have cooled off and we are going to be spending more whenever we visit your stores?
See, we are hopeful to sustain our margins and improve our margins. Exact, I cannot let you know at that point of time because macros are really challenging because of interest costs. It's pinching the pockets of the consumers. So that is one area which is some concern as far as going forward is concerned.
Earlier, Sandeep, you're looking for a couple of numbers. So earlier you were guiding, I think, for early 20s, right? 21, 22% odd. So you're saying the margins will be better than that at least.
I think that as the raw material has cooled down, I think that it should be near to that, some upward.
Okay, got it. Yeah, so an upside risk to your margins is what we're looking at. Post your quarter 4 numbers, we'll quiz you a little bit more and try to get more concrete numbers. But on the home textiles business, I think it contributes mid-teens. Now you're saying that vertical will grow at a faster clip in comparison to your core business or your other part of your business. as a percentage of your sales, where do you see this number stabilizing? Clearly, you're indicating that home textiles is seeing good traction.
I think it was, 9 to 10% a few years back, and now it contributes almost, 14 to 15% of the revenues. And that contribution should also go up going forward in this year also, because we are seeing good demand from the home textile segment. And also, as our blanket plant would be operational by next financial year Q1, so that would add another growth, should be around 60 to 70 CR in our top line in home blankets, home textile segment.
So the home textile business as a contribution will go up further, as you mentioned. But given that the demand environment is very challenging, do you think it will be hard to maintain that 30% growth rate in the home textile business? It's something you had guided for earlier. In FY24, you said that home textile revenue growth would be 30%. Now, do you think that could be a bit challenging given how the global demand situation is panning out?
See, one thing is actually what you're saying is right. Definitely, there have been challenges in the macro because of interest rates gone up and because of recession, and also consumers are spending less as compared to the past. But we are at a very small base. So higher growth is not a challenge for home textiles, as the base level is very small.
Okay. So post this expansion from around this 160 crores, home textiles, taking into account the J&K expansion, at peak, what kind of revenues can it do?
I think if the J&K expansion is complete, we can easily go for 250 to 300 CR. 250
to 300 CR. All right. And you're hopeful that maybe at least by FY25 you can hit that mark in home textiles?
I hope so.
Okay. All right. I wanted to talk a little bit about the online channel as well. I think 6% of your sales, 6-7% comes from that part, the online channel. Do you see it grow further? Are you seeing a pickup in traction there or not too much?
I think, to be very honest, online sale has been growing in the line with the offline sales. It used to be grow at a very faster rate at pre-COVID times and COVID times. But now the growth rate is same. Last year, as I compared to this financial year, we grew the same rate in offline and online sales because the customers are going out and spending money. So that trend, which was like only online sales, will boost the sales. Actually, I'm not seeing visible this year.
All right, Sandeep, final question before we let you go. The stock price has seen a sharp correction, actually. There was some euphoria that played out, I think, towards the end of last year. It was at 900 rupees. It's come down to 700 rupees. Any communication from some of your investors? I mean, is there some selling pressure or what's going on out there?
This is the only thing which I don't understand. Stock prices, plays on its own. So we are here for our performance, and then the rest of the market has to see the stock price.
I just thought we'll quiz you on that because it's a 25% correction, and going by what you're saying, your things are looking up for you. So, but thanks so much for joining in, Sandeep, and filling us in with your take on your business. By the way, the markets have taken a U-turn. From being higher with a gain of around 70 points, 50, 60 points on, we're now down close to around 40 points. So that's a correction of close to around 80, 90 points from the high point of the day, Sonia.
Oh, absolutely. So, yesterday's downtick that we saw, there's some more accelerated pressure. Then it's coming from Reliance, Tech Mahindra, TCS, L&T. A lot of the heavyweights continue to contribute on the downside. So, good time to get Rahul Sharma. He's the director and head technical at JM Financial Services to give us his view. Rahul, thanks for joining in. This market had such a smooth trajectory, but now, brakes have been put on the rally, so to speak. Do you think there is a reason for the uptrend to resume itself? What are the levels that you're looking at in the near term?
Yeah, good morning, Sonia. So we've enjoyed a streak of green candles, day to day, back to back. We've seen a phenomenal 1,000-point rally from where we were in March end. Now, obviously, a bit of pullback here would be healthy for the technical trend. Yesterday was the first session where we actually formed a lower low. And finally, Nifty is seeing some sort of a pullback. Now, this pullback basically means that, it's only making the structure more robust because the quality of this up move has been far, far better than what we've seen in the past. So just to give a perspective, the market breadth and thrust indicators are clearly above what they were the last time Nifty was at an all-time high. So this indicates that, the participation has been broad-based and the length and breadth, both of them have been quite good in terms of the entire 1,000-point rally that we've seen. So what that translates into is a very good buy on dip market where key support levels are to be, kept an eye on. And like, for example, 17,500 as we speak is a good support level going into the next few trading sessions. 17,500 is also the 38% Fibonacci retracement of this entire rally that we've seen from March end onwards. And the move has got long legs. I would be looking at a figure of 18,200 in the April series itself, which is a significant upside given the kind of setup we've had. Now, clearly, there are multiple reasons. One reason being in Q1 calendar year this year, we have been the second worst performing index globally. So even if we play catch up with the global markets, which have been doing very well, we are easily above 18,000, 18,200. Secondly, the relative comparison of Nifty 500, which is the broader market index, with the S&P 500, the US broad market index, is suggesting that the period of underperformance with respect to US equities is done, and probably from here we should start outperforming them. On the way down, we fall less, and on the way up, we participate more. So these are the two key factors where we feel that this move has got long legs, and we should be heading for the 18,200 mark anytime soon.
All right. Okay. So we'll outperform. So that's good news, Rahul. Good morning. Thanks so much for joining in. Rahul, what about the PSU banking index? Are you tracking that? Many of those PSU stocks, they did very, very well. Then they went in for a bit of a correction. But do you think now they're good for more?
Yeah, Nigel. So, first we saw the Nifty 500 index breaking out from the downward sloping channel. Then it was the Bank Nifty, then Nifty. And finally, yesterday, what has happened is the PSU Bank index has broken out from this entire correction that we have been since last 4 months. Now, clearly, the quality of move has been very good. The volume participation that has been in PSU banks is worth noting over here. So what is happening is the volumes have gone through the roof across stocks. And this has been not only the top tier PSU banks, but the entire kitty of the PSU, where even the smaller names, the lower or the tier 2, tier 3 PSU banks have done well. I think from an index perspective, a 10% up move is very much possible on the PSU bank index. From a stock perspective, this move can be even higher. Around 15% is where we are pegging at in this particular up move. So I think PSU Bank Index is the latest one to add on to this string of breakouts that we've seen in the last few trading sessions. And I think, it just adds on to, more upside for the Nifty as well.
All right. Any individual stocks that, you like where the trend is on the upside? All right, those are the visuals of the new listing. Avalon Technologies Limited, going to list in just a while from now. Okay, let's wait for that and let's see how it looks. Remember, it's about an 865 crore, IPO. Not done really well in the opening tick. Just a bit subdued. The case is similar with the market. So the market sentiment is not that great today. Subdued listing over there. The company is an integrated electronic manufacturing company, so it focuses on a lot of high-value, precision-engineered products. It has about 12 manufacturing facilities across the globe as well. It gets a large amount of its contribution from the clean energy and the mobility space, so it is into manufacturing of electronic components for segments like clean energy, for mobility, for the industrial segment, for the communication vertical. That's the space it is in. Post this issue, the promoter holding will go down to about 51% in the company, and they will be using the money. It's a fresh issue of 320 crores, out of which part of that money will be used to reduce debt. So they have about 145 crores of debt reduction that they've planned through this IPO. But Rahul, sorry, we just had to take a little bit of a breather because of this listing. I was asking you about any other stocks that you see an uptrend in from the Nifty, in banking or in technology.
Yeah, while this has been a broad-based move, I think three key sectors where I think the focus should be is one is banks, second is NBFCs, and third is capital goods. So, starting with capital goods first, because this is where the best risk reward is, there as we speak. Larsen & Toubro is one stock which has taken a beating since last few trading sessions, and primarily this has been because of what has happened in the IT space. Larsen holds a significant chunk in the IT space as well. So I think 2200 risk reward is very much favorable for L&T. Capital goods as a sector has got long legs. I think 2400 is where we are looking at. So for 10% upside, one can look to get into Larsen & Toubro. From the banks, I think it has to be, the smaller run PSU banks. Union Bank is one setup which we like a lot. Easily around 10 to 15% up move can be expected from these levels. the risk reward again is very, very, attractive at these levels. And from the NBFC space, Poonawalla FinCorp is one stock that we like particularly. Yesterday, there was a big volume expansion seen along with a reversal on the monthly as well as weekly charts. I think, there is a good 10% upside to be had in Poonawalla FinCorp as well. So these are three ideas: L&T, Poonawalla FinCorp, and on the banking pack, we like Union Bank of India.
Okay, got it. Thanks a lot for joining in, Rahul. Appreciate your thoughts. Let's slip into a quick break on that note. But on the other side, we have the management of Just Dial joining in. Abhishek Bansal will be joining in to talk about their Q4 earnings. Stay tuned. Welcome back. Flat for the market. So let's talk about Just Dial. The company reported a good set of earnings with a healthy growth in revenues, both sequentially and year-on-year. The company's margins also saw good improvement and are now at a 2-year high. Rima caught up with Abhishek Bansal, the Chief Financial Officer at Just Dial. Listen in to what he had to say.
See, paid campaigns addition of either 16,000 or 18,000, it could have some bit of quarterly fluctuations. Overall, the way we look at it is pre-COVID, we were at about 536,000 peak campaigns, and now we have surpassed that and we are at about 538,000. So this year, paid campaigns have seen a very strong additions, and going forward, the way things are panning out, we think that future growth will be driven partly by paid campaigns and partly by realizations as well.
Have you managed to up your pricing on an aggregate or blended basis?
So last year, sometime during the second quarter, we had taken about 12 to 15% price hikes across geographies, depending on type of category of SMEs. And as I mentioned earlier, for the coming year, I think part of growth should come through realization growth as well.
When is your next price hike expected?
So the way it works for us is we have two types of listings. One is the premium listings and other is the non-premium listings. In premium listings, there is a price reset that happens every month, depending on how traffic is panning out. So there might be a category where we are seeing a lot of users coming in. Those categories would see that price hike happening on a monthly basis. And conversely, also, if there is a category which is showing any decline in traffic, we pass on that benefit as well to our upcoming advertisers. So to that extent, our particular pricing algorithms are highly dynamic.
Got that. Can you talk about your margins? Margins currently stand at 14.4% at the EBITDA level. You have been talking about improving your margins. Where do you see it headed?
So margins, optically based on reported revenue of 845 crores, yes, they are at about 14.4%. Or 15.3% if we just exclude the non-cash ESOP expenses. However, important to notice, we collected 945 crores last quarter, almost 100 crores higher versus the revenue that we accrued. So to that extent, on an exit quarter basis, we had about 268 crores of collections. And on that basis, our margins indeed were 25% plus. So as we move forward into fiscal 24 and as our revenue converges with our collections for this year, this margin should sequentially keep on seeing an uptick, which is visible in last 2 to 3 quarters as well.
So sequential improvement in margins will continue, right?
Yes, definitely. So this quarter itself had about 202 basis points increase. So similar increases should keep continuing in coming quarters as well.
So about a 200 basis points quarter-on-quarter margin improvement, right? That's something we should anticipate from Just Dial going forward. What was the ad spend this quarter?
About 6 crores we spent for the quarter.
And do you have any guidance or targets on ad spend going ahead?
So on a long-term basis, I think this business requires 6 to 7% of our top line to be spent on advertising. It could fluctuate a bit on a specific year basis. For coming year, I think anywhere around 35-40 crores definitely we would want to spend. And further increases could depend on how things are panning out.
You have a very, very large cash on your books. Abhishek, you keep getting asked that, and your standard answer has been that you are focusing on growing your core business, but your core business itself is generating cash, and it doesn't require additional cash, this 4,000 crore that you're sitting on. So can you explain if the company has any thoughts on utilizing the cash ex of the core business, something in FY24, can we see you move on it?
So very valid question. There is a large 4,067 crore treasury that we have today, and we are efficiently managing it. It yields about 7.2% returns at this point of time. Going forward, part of it could deploy it for any organic or perhaps even inorganic opportunities, considering the fact in last 10 to 12 months, valuation expectations across the board have come down, and there could be adjacencies which we could get at decent valuations. But we will explore as and when any such opportunities come. So you are right, free cash flow are strongly generated by the core business. And while the 4,000 crore cash on books stands as it is, we would look to deploy part of it in any organic or inorganic opportunities in future.
Abhishek, this is the first time you are talking about inorganic opportunities, looking at adjacencies which are now available at reasonable valuations. Can you elaborate a little bit more on that? What is it that you are planning? And are you in talks with potential targets, acquisition targets?
So there aren't any specific opportunities that we are evaluating per se. The key point being that we have a great war chest, and at times like these, we as a company have always been profitability focused. So since we have a good amount of cash and there are good opportunities to deploy, which could be value creative, we would be open to looking at those.
But nothing on the anvil right now. You have some new initiatives.
Nothing specific, yes.
You have some new initiatives which you are working on. One of them is JD Expert, the other one is JD Mart, and the third one is JD Shopping. Can you tell us where each of these initiatives stand and what is the outlook on each of them?
So JD Mart primarily pertains to B2B side of our business. JD Mart has been a great driver for our growth in last year or so. So JD Mart platform is very much live. JD Experts is basically a transaction layer that we are adding for services. As we speak, there are pilots that we are conducting in across 10 to 12 cities in 10 to 12 on-demand home services categories. During FY24, we intend to scale up transactions in these particular vertical. And the third initiative, JD Shopping, we are evaluating unit economics on this particular initiative. And the idea is to ensure that maybe fulfillment will be done by SMEs itself. And it could be a lead generation or price discovery model wherein we help users to be able to discover what are the prices available in local stores and thereby interact with those particular businesses and do the purchases.
How much did JD Mart contribute to your revenues, or what were the revenues of JD Mart last year, and what is it growing at? Any numbers for next year, FY24?
So B2B segment revenues were about 26% of our overall revenues last year. And overall, in last 2 to 3 years, this particular segment has obviously outgrown the B2C side of revenues. And we expect such outperformance to keep continuing in coming years as well.
And is it profitable, JD Mart?
Yes, definitely. So overall, the whatever margins that we earn, even the B2C side or the B2B side, definitely our particular paid subscription business is highly profitable. And in fact, because B2B ticket size is higher versus B2C, that ends up generating even higher margins.
So B2B margins are higher than B2C margins, right? Your
Yes.
JD Mart margins. And
Yes.
will JD Expert go live in FY24, first half, second half, and will it generate revenues for you?
So at this point of time, JD Experts is already open for users, and scaling up of those particular transactions should happen sometime during the first half of this particular fiscal 24.
Okay, that's one of the big stocks in focus, 6% higher now. And the management commentary is also quite strong, actually. Revenue growth is on the upside, and they talk about JD Mart, which has been a big driver of growth for them. But let's get back to the markets, not the equity markets, but the commodity space, because there's lots that's happening there. Brent crude is now around $85 a barrel. But Manisha Gupta is here. Manisha, what's the one commodity that you're tracking today?
Well, thank you for that, Sonia. Well, the crude oil prices are expected to be bullish in the third and fourth quarter. That's exactly the kind of commentary you will hear for other industrial metals as well. I'm looking at the base metal prices, which have reacted on the positive side after the first quarter GDP numbers for China have come beating street expectations, and they have come at 4.5%. If you look at the other data that also came in today, whether it was retail sales, industrial output or investment numbers, they have come in on the positive side as well, but uneven. What the street was expecting, we haven't seen all of those numbers come in as expectations. And that tells you that economy still continues to be uneven there. But the street exactly is expecting a Chinese stimulus because of that. And that in turn could be supportive for the metal prices. We anyway are looking at the fundamentals turning on the positive. There already is an 87 probability now of 25 basis rate hike by the Fed in the month of May. That has been factored in. And we have seen the dollar index get stuck between that 101, 102. And that in turn also seems to be supportive. Take a look at the nickel prices then, and they are trading off their 5-month lows. We've seen strong support come in. In the last 6 or 7 trading sessions, we've seen the prices gain up by nearly 6% as well. Fundamentals, as I told you, have been on the positive side as well. So when you look at the inventories, the LME stocks itself, they have declined by 40% in this year until now. The copper prices also are trading at around 1-month highs. We have seen prices gain because of lower supplies. There are very bullish statements coming in from Trafigura and Goldman Sachs, anticipating lower inventories and higher demand going forward. The LME inventories for copper as well at around 56,000 tons is the lowest since 2005. So everywhere that you look, the inventories are weaker. Chile's Codelco says that while last year you saw production decline by more than 10%, this year as well the production is expected weaker by 7%, and Chile is one of the major producers for copper. So lower output, lower inventories, stronger demand expected from China is all very supportive. Take a look at the zinc prices, and we have seen those prices gain to a 1-week highs. We've seen 3% of gains in the past week for that one as well. And when you look at the zinc LME inventories, here as well, the gains have been quite strong. We are looking at lowest inventory on LME for zinc since 1989. So that really is the case across street. Lower inventories and stronger demand expected from China, which actually consumes 50% of the global metals, is where all of these metals seem to be taking cues from.
Okay, thanks a lot for that. So that is on the metal space. Well, let's get back to the markets now. Tata Chemicals is one stock in focus. Sonal is here to tell us why that's been buzzing. Sonal, over to you.
Well, yes, it's buzzing on the downside. Tata Chemicals has gone ahead and taken a price cut this time in their soda ash product to the tune of 3 to 4%. This is effective from April 17th. Now, remember, this is a price cut that has come in after 6 months. The last one that they had taken was back in November. And in the last 2 years, there's been a substantial surge in soda ash prices. So this cut definitely comes as a dampener for the company. And it comes amid falling soda ash prices in China as well since mid-March. So globally, soda ash prices have been seeing some fall. There has been substantial capacity addition in Inner Mongolia that has come in from that is expected to come in from May 2023. And if that happens, of course, that would put some more pressure on prices as well. And this is something which Kotak Institutional Equities sees as an incremental negative for the soda ash market. Now, there are uncertainties remaining on demand supply, and this is something that will need monitoring as well. Now, remember, soda ash is an important product for the company. Around 15 to 20% of their consolidated EBITDA comes in from soda ash itself. Price cuts should at least partially be mitigated by lower coal prices. So raw material prices are lower. But yes, that is the reason why price cuts have come about as well. So there could be some pressure on margins, but not too much. Kotak Institutional Equities also says that they expect Q4 earnings to be strong due to firm realizations in their US exports. However, the idea or the projection for second half of calendar year 2023 is not very clear. Soda ash realizations, they are now correcting after sharp rise in the last 2 years, as I was mentioning earlier. And this has come as a surprise. And that's why a big cut on Tata Chemicals.
Okay, thanks a lot for that. So Tata Chemicals, huge downtake, now down almost about 6%. Let's slip into a quick break. On the other side, we have a special segment, Quarter Se Quarter Tak. Sonal will be back with us. She'll analyze expectations from the oil and gas sector in Q4. Stay tuned. Okay, this is our special segment, Quarter Se Quarter Tak. Sonal is here to take us through the expectations from the oil and gas sector this quarter and what we can expect. Sonal, over to you.
Well, it is largely going to be a good quarter for the oil and gas sector due to better realizations, and also fundamentally this quarter is supposed to be better. Remember, crude prices, they have declined sharply, around 19% on a YY basis, 8% sequentially to $81.2 a barrel. And on the other hand, Singapore GRMs, they have increased to levels of $8.2 per barrel versus 6.3 earlier. And this is something that will show in Reliance's earnings, which will see an improvement led by the O2C or oil to chemical segment and lower windfall taxes as well. Overall, this would lead to an EBITDA increase of 5% on a sequential basis and on a consolidated basis as well for the company. For oil marketing companies, lower crude and higher refining margins will definitely be a positive, but a bigger turnaround will come in from the marketing segment, and that is where improvement will be seen in both the segments and will lead to a 77% sequential surge in EBITDA and 3.3 times increase in PAT according to ICICI Securities. For upstream companies, even though crude prices, they have declined, realizations post-taxes have been around $72 to $76 a barrel, and gas realizations have been stable quarter on quarter, so this will see a set-off. Overall, high other income will aid earnings for oil producers this time around. City gas distribution companies will see a mixed bag where MGL will see the best performance. MGL took sharper price hikes versus IGL, and hence the EBITDA performance is expected to be better. Gujarat Gas will see a weak performance this time around, led by lower demand in the industrial segment. Nirmal Bang estimates that Gujarat Gas will see 26% decline in EBITDA YY. IGL will see a 12.5% increase, but the biggest rise will be 72% increase in MGL's EBITDA. Now for gas utilities, GAIL and GSPL will see a weak quarter due to supply shortages from Gazprom and also weak demand, while Petronet LNG will see better numbers. That is because of lower spot LNG prices. Leaving you now with the valuations, all producers are still seeing compressed valuations. So around 3 times is what is the number for ONGC. Reliance Industries is at 21.6 times. If we talk about BPCL and HPCL, BPCL still continues to trade at a premium. MGL, which is expected to do well, is the cheapest in the city gas distribution space at around 12.8 times, and the others are higher here.
Okay, thanks a lot for that, Sonal. So that's the oil and gas space and what to expect. But all eyes are on the Apple store. It's opened its first India retail store. In fact, I think a short while from now, it'll be open to consumers as well. The design of the Mumbai store is inspired by the roof art seen in Mumbai's iconic Kali Pili taxis, and stores will open to shoppers at 11 a.m. So half an hour from now. Apple CEO Tim Cook too is in Mumbai for the store launch. We saw that blitzkrieg of pictures that came out yesterday, especially the one eating vada pav with Madhuri Dixit. That was the one that stayed with me. But our entire team is there at BKC to get a sense of what the mood is like. So let's go straight up to them. Okay, look at them right there. There's Mangalam, Shivani, Zenia in full form. Guys, there's so much FOMO because, I'm an Apple user as well. But Mangalam, what's the feeling like of the first store in India after 25 years of Apple being in the country?
It is FOMO indeed for everyone who's not here. But tell you what, there are so many people here already. It's a Tuesday morning in corporate BKC, but this may well have been a Sunday brunch scene. Almost 1,000 people waiting outside to get their first step into the first flagship store of Apple. Now, I'm an Apple fanboy, a certified disclosed Apple fanboy. Shibani is a tech nerd. Xenia is Gen Z. So between the three of us, we have an entire 360-degree picture of what one can expect and the kind of excitement that there is. But Shibani is the lucky one. She's got a sneak peek into what the store looks like. How is it any different from all the other Apple stores?
So I have been to the other Apple stores around the world. It's almost the same, just that there is a hint of color, very much Indian. There is a hint of color. There is a hint of color outside. Also, the store, as the glass facade says, hello Mumbai. But let me tell you something, Mangalam and Sonia, it's massive. It's, it's 2 floors inside.
20,982 square feet.
Yes, it's massive store. You'll get to experience the products kept on the table. Everything is there. Range of products available, something that you don't get at the Apple authorized resellers. And I'm pretty much excited. I wish to purchase an AirTag. I wish to purchase a strap for my Apple Watch Ultra. So this is something that I'm looking forward to purchasing. What about you, Xenia?
To be honest, I was in school when my mum actually got her first iPhone, and I used to come running home from there and always wanted to sit and explore more options. And to be honest, I think now it's been a while that I'm using the iPhone that I have. Hopefully, I don't know, I might get a new one. And I already have today, I hope, I don't know, let's see. But yeah, I'm really looking forward to it. Let's see.
All right, you two aren't the only one. It is me and the 1,000 people who are behind us as well. And we are given to learn that it would be none other than Tim Cook opening the doors for everyone to be welcomed into the first flagship Apple store in Mumbai. Of course, we will get you all those details. With that, it's back to you, Sonia.
So Mangalam, I'm just wondering, don't all of those people back there, the thousands of people, don't they have to be at work just like all of us? I mean, how are they getting to go and, get to the Apple store? But anyway, that's a question for another day. Mangalam, when Shibani went into the store yesterday and we did see some videos of it, I saw that there was a display of new Apple iPhones, and there's the sunshine yellow iPhone that I think Shibani put out itself. That looks really interesting. But guess what? I think in September is when the next iPhone comes through, right? So I'm going to wait for that. What about you, Mangalam? Are you buying anything today?
I was very, very tempted to get the sunshine yellow, but I think if I buy that now, then I'll feel bad about not buying one in September. So I'm in camp September with you, Sonia. But then you never know if it's a good deal. And Tim Cook hands a phone to me himself, then no price is too much, man. I'll get it.
Wow, that is some serious manifestation, okay? I'm gunning for that one. But guys, thanks a lot for the 360-degree perspective. The hype is real, as we've been saying, the first Apple store in India. And, the experience looks pretty good as well. With that, it is curtains down on this edition of Bazaar. Thanks a lot for watching, though. Don't go anywhere. Lots of action coming through in the next couple of minutes on CNBC-TV18.